everybody. Happy Friday. How's it going out there? Happy Valentine's Day, I believe, as well. Yeah, it's Valentine's Day. It's still Friday. Hope everybody's doing well today. This is our quick stock market update show where we cover the good, the bad, and the ugly in the markets. We'll cover that, of course, as we go. Remember, the markets are closed on Monday, so there'll be no closing beat show. I hope you guys enjoy the long weekend out there. We're also playing a game. It's called Guess the Dow, bottom right-hand corner of your screen if you want to play along. If you happen to be the closest without going over, we'll send you a $100 gift card. Or credit your account $100. We announce the winner every Friday. Today is Friday, so we will announce the winner. It is Ron Arnold, not one of our customers, but he guessed 29393.53. He was the closest without going over, so congratulations, Ron. I know the email's already gone out. We'll just need your address, and we'll send you that gift card. So if you want to play along, you have until tomorrow at lunchtime to take your guess for where you think the Dow is going to close next week, and we'll see what's going on there. Well, good luck to all of you out there. Last night for our class for customers, we covered stock market recession statistics, just kind of going over how the markets behave in and around recessions and length of declines and all that great stuff. So hope you will check that out if you're one of our customers. Your jazz song of the day is No Better Fit, Ella Fitzgerald, My Funny Valentine. You can actually look up any live performance of hers when she's done that song. She never does a song twice. That was her thing. Never does a song the same way twice, I should say. So, sort of honor of Valentine's Day, My Funny Valentine by Ella Fitzgerald. Enjoy. All right, let's take a look at the stock market. You got the Dow lower by 25, S&P 6 to the upside there, and 19 for the NASDAQ. So kind of a mixed day overall. We could take a look here. It's also Valentine's Day. I've got some stats to share with you on that I shared with customers in our email last week. Here's the S&P 500 sitting at highs, basically just a week where we close at highs, although we were just slightly positive on the day. It was slightly positive on the week there as well. The S&P basically performed exactly as it should have performed, at least compared to past Valentine's Days. There's also we posted a picture on our Instagram there. We're going to start putting some of the stats on there for you, so give us a shot. Go over there and hit follow on our Instagram if you're interested in some of these stats. We're going to continue expanding on that. But if we take a look at the S&P 500, what we did is we went back since 1950. There's actually 50 Valentine's Days that occurred on a market day when the market was actually open there. So what we did is we put this in our letter last week for customers. I'll share it with you. Valentine's Day performance. Here is every single Valentine's Day going back to 1950, the S&P 500's performance. At the bottom, you might notice that the average performance is 0.04% to the upside. The median performance is a negative 0.05. Where did the S&P close today? Up 0.18%. A flat day. Right? So whether you use the average, median, or whatever, it's just a flat day. Valentine's Day typically is a flat day. There isn't a whole lot that happens, at least in terms of the average performance for the stock market. Today was no different, so if you happen to be taking a look at that. What I found interesting and what we posted on Instagram was Valentine's Day is on 2/14. The best gain on record, which was in 2003, this is backwards actually, but 2003 was the best gain for the S&P 500 with a gain of 2.14. Kind of an interesting coincidence there, I thought. Anyways, we'll go over some other stats for you here in just a little bit, but that is a quick little update at that one. If you look at the S&P sitting at highs, if you look at the NASDAQ sitting at highs, you look at the Dow sitting just off of highs there. Russell was the underperformer today. The NASDAQ did outperform all the other major indices, including the S&P 500, but the Russell 2000 ultimately pulled back just a little bit. That was your weakest performer there. We were lower to start the day thanks to more quarantines in China. They're working hard, I guess, to try to, get this thing figured out over there. So more quarantines means, wait a minute, maybe this isn't as great as we thought it was, or in the recovery phase as we thought it was. And so because of that, you got the markets down a little bit today. Industrial production came out today. That also fell by 0.3%, but it was pretty much expected. Technically, it was better than expected. I think we were looking for down 0.4%, and all of it because of Boeing, the production obviously out of Boeing, the 737 MAX, which we'll cover some of that in a minute. So that was really expected. I don't think that was the reason the market started lower. I think it was the sort of virus issues, as well as Friday performance so far this year. I'm going to cover that here for you in just a little bit. People are not wanting to take risk on Friday, so I'll share that with you. We got a little bump throughout the day. It was a little bit after lunch. We got a little bit of a bump there. White House came out and said that they were going to work on tax incentives for investors, where they were going to allow you to invest money tax-free that was general income, not necessarily for retirement, but invest tax-free. There's going to be a lot of changes to that. They were just kind of teasing it. Hey, vote for us and we'll give you more tax breaks. Nothing's happening anytime soon. That is just the incumbent's official start of the election season. So we'll see what happens there. In the Dow, If you're following along today, some of the stronger names were not Avon, American Express, up by 1% today, an outperformer in the Dow. You also had Visa a little bit higher. Yesterday was ex-dividend for them, remember, so today is kind of like the, don't have to worry about that anymore, and so you got poked to new highs there for Visa, so looking good. On the downside, you had IBM pulling back. It did pull back those stats that we shared with you where it was down about 1%. It held in there perfectly. Obviously, today it pulled back a little bit more. So IBM now officially down on the week. Not bad, just had a great run after earnings, so a little bit extended. Caterpillar was also a little bit lower. There was a lot of analysts that disagreed with what Goldman Sachs said yesterday, and sort of investors looked at, well, the masses may be more accurate than just one guy overall. I don't know. We'll see. Cisco was also down just a little bit on the day, kind of a follow-through from earnings there. Not much to report else in anything new. All right, in the S&P 500, you have Expedia up 11%, NVIDIA up 7%, hitting new 52-week highs, and Mohawk. All three of these are going to be because of earnings. Mohawk actually beat by 5 cents. They did lower their guidance, but shares were still higher on the day for them. Oh, also Paycom. You look at Paycom getting a little follow-through there as well, up another 3.6%. Nice, like that. On the downside, you got AIG just selling off from its earnings. Remember, it gapped higher. It started with earnings a bit higher there. Sold off, obviously, all of yesterday. Pointed that out. Today, continuing lower in the middle of this downtrend, which just is kind of a little bit wild there. There was also a lot of analysts that lowered their price targets today. I think they kind of had to, but that's why AIG was lower. Marathon Oil, this is one of the weaker ones in that space. Now, oil was higher. We'll cover in a second, but a lot of relative weakness in Marathon Oil. Remember, they're getting rid of Speedway, so there's some pricing, repricing going on in there. That one hit new 52-week lows, and Kraft Heinz continuing to sell off. Lost about 3.2%. Today. Yesterday was earnings, wasn't good, and today their credit rating at Fitch was dropped to speculative. All right, so Kraft Heinz a little bit lower. That was one of your weaker ones in the S&P 500. Let's look at the sectors overall here. We'll start with utilities hitting new highs and REITs hitting new highs as well. Both those sectors, obviously defensive in nature, yields dropping, that helped them today, but they're just continuing their strength. Really, really strong there, and they continued from, well, not just yesterday, but really overall. Gold added another 0.5% on the day there. Not bad. Just kind of chopping around at highs, but ultimately finishing higher on the day and on the week. You got crude oil bouncing as well off that extended low, finally getting a little momentum to the upside. And that's why you're going to see some of the oil explorers, oil ETFs, things like that. They were higher. USO, it's United States Oil. They were a little bit higher on the day. And I believe, no. Let's take a look at, oil service stocks actually did close a little bit lower, so not really a bounce out of the price of oil bouncing there. So a couple of them did hold back on the day, but all in all, not too bad. Silver a little bit higher on the day as well, sort of a pinching, little bit of a pattern there. And tech hitting new highs. What else is new? I've been saying that one all day. Consumer staples also hitting new highs if you happen to be looking around at the individual sectors. Let's look inside some of these sectors. You got Home Depot. Up 1.1% on the day. Upgraded at Wells Fargo. Got a price target of $265 on Home Depot, so hitting new 52-week highs as well. Tesla, it finished down $3. Okay, so it was up a little bit earlier. Tesla losing $4 basically. They priced their shares to at $767. Sorry. So they're going to price that secondary offering we talked about yesterday at $767. Total number of shares they put out there comes out to a raise of $2.03 billion, wasn't it? $2.3 billion, I think. So higher than they originally said, and nobody really seemed to care. A stock price just floating around there. Elon Musk, interestingly, is going to buy $10 million worth of that this offering. And I think Goldman Sachs can buy up to like 500,000 or 600,000 shares as well. Larry Page might have been in there as well. There's a couple other people buying shares of this new offering. Anyways, moving on. Canopy Growth up 13% on the day. They did well. It was higher. They lost less than expected. Now, they lost 35 cents a share, so they're not making money, but they lost less than expected. We were expecting them to lose 50 cents a share. The company said they saw strong demand in the recreational market. They're getting more market share in the medical markets there. So they were pretty overall positive. That did help some of the other stocks on the day, like the Aurora Cannabis that added about 7%. These are wild, man. These are wild. Tilray adding 7% coming off lows there as well. You might know Roku reported earnings. It did start strong on the day, but struggled all day long, down 6% on the day. They missed on earnings. They did guide above expectations, just struggled all day, man. It was like it started off, everybody was a little bit excited, and then all day, just a little bleed to pull you back lower there. You got Yelp, which finished the day lower as well. Interesting range that it's been in lately. They missed on earnings, missed on revenue. They spent more on marketing, so that hurt them overall, hurt the bottom line. And they're buying back 250 million more shares. So that is Yelp down about 3% on the day. Speaking of buying back shares, eBay up 2.5% on the day. They're raising their share buyback from 1.5 billion to 4.5 billion. That's the opposite of what Tesla is doing. Tesla is adding more shares, which is kind of what the public markets are supposed to be for, to raise money. eBay is taking away money. So they're buying back 4.5 billion there. Looking over at the, there you go, looking at the cruise lines. Royal Caribbean down 0.4% on the day. They canceled 18 of their Asian cruises, and they laid it out for you. They said they expect the virus impact to be about 65 cents per share. If they have to cancel through April, more cancellations, then add another 55 cents to that. So they're actually able to quantify what earnings look like for them for the rest of the year. That puts them under the low end of the range, obviously, but all right. United Airlines a little bit lower on the day. They took the 737 MAX out of schedule until September. That is the longest of any other ones out there. Did a little research. Southwest Airlines and American Airlines already pushed out till August. United Airlines says, September. That's where we're going on this thing. So that is what you have there. You got 65% of the S&P 500 trading above the 50-day moving average. That's just a small tick from yesterday. 69 new 52-week highs. 8 sectors in the mix again, but Kinder Morgan was the only materials name, so it was just one stock in the materials space there. New highs on the day. Of those 52-week highs, of course, NVIDIA, we talked about that already. You got PayPal in the mix as well, hitting new highs after a little bit of a pullback there for a while. You got Intuit in the mix, 2% higher, of course, new highs, and AMD hitting new highs again. Strong week for AMD. You got Duke Energy, not Duke Realty. Duke Energy hitting highs, 1.717%, following up on the earnings from yesterday. So a good little momentum move there, helping out the utilities. Republic Service Group, this is the trash company, or waste company, they'd probably prefer that I say. Up 1.43%, starting to peel away a little bit there. These stocks have been on fire, man. I mention it every week this week. Waste Management doing the same thing in the mix. MasterCard hit 52-week highs. They have officially been approved in China to clear their transactions over in China. Looking good there. Crown Castle hit 52-week highs as well. That's going to be because of T-Mobile. We talked about that earlier in the week. And, of course, Home Depot, I already mentioned, got an upgrade there. On the downside, it's basically the same names. Ben Franklin Resources, Marathon I mentioned already. The real weak stocks continue to be the real weak players there. All right, let's take a look here. Look at, not that one, this one. So what we did on the chart here is we plotted every single day for the start of the year, and then we plucked out the Fridays. The red lines on the bottom, well, actually, every colored bar is a Friday. Notice that every Friday but one has been lower, meaning investors haven't wanted to take risk over the weekend. We got a 3-day weekend here coming up, so it's pretty interesting that we stayed positive on the day. But every Friday, that's been the case. I didn't get a chance to put in today's. That is technically there, but don't look at that one. That doesn't count. Actually, today would be flat to positive, well, positive for the S&P 500. But excluding that, this data is accurate down here. We broke it out by weekday. I know it's not a lot of data. This is not like a great study, but it's just something to point out. Mondays so far have had the best returns overall. 0.7% is the median return. 80% of the time it's been positive so far this year. I know, not a lot of Mondays, right? But when you break it out by weekday, look down to Friday here. Friday has been the worst performer, only positive 14% of the time before today. That stat goes up just a little bit because of today finishing in the positive. But still, median return will stay in the negative even with today's data there. Not good. People don't want to, and that makes sense, right? You got the coronavirus thing going on. People not sure what to expect over the weekend. They don't want to take the risk over, Saturday, Sunday, and have to wait till Monday to be able to do something there. So just thought I'd share that with you. A quick little simple study to wrap up the week. What else do we have here? Today's the 15th anniversary of YouTube, by the way. Cool. That's pretty cool. Obviously, if it weren't for YouTube, I wouldn't be here. Nobody would be on YouTube, but you get what I'm saying. So congratulations, YouTube, 15 years. Berkshire Hathaway, well, what is that? Something after hours here? It looks like they got their latest filing. let's take a quick look. I don't have everything organized for you, but if you got a second, Berkshire Hathaway. New positions in, where is the new positions? Kroger, ticker symbol KR, and Biogen, that's BIIB, ticker symbol. Looks like we've got a reduction in positions. Where do they have? There we go. Goldman Sachs down about 35% there. They reduced Wells Fargo down about 15%. That was Warren Buffett himself. That's his position. And so is Goldman Sachs. And Restoration Hardware, which, remember, is not his position. That's one of his guys there. Restoration Hardware really went for it. So they increased their position, call it 50%. Just under 50%. Going for it. All right. Restoration Hardware, now called RH. All right, so Monday the markets are closed. Tuesday earnings will start with Advanced Auto Parts, Expeditors, Fluor, Medtronics, and who else? VMC Corp will come out. Walmart before the open there as well. After hours on Tuesday. After hours on before the markets open on Tuesday will be Walmart. After hours, you really just have Allergan and Herbalife, a couple other small names in there. And that's what I have for you. We nailed it. I'll take a second, try to answer some of your questions, and I'll send you on your way if you guys have no questions. I think Warren Buffett's getting out of the game. More and more of the positions, smaller positions, are not his, and he's vocal about that as well. But Goldman Sachs and Wells Fargo are, so he's getting out of the finance game, or at least taking some of the profits there, it looks like. Dustin, you got it right. Yeah, it does help earnings. It requires a little bit of adjustment there, but it's a bit of a game. Norbert, welcome, man. I love it. Harry's got it spot on there. Yeah, supposed to be using the public markets to raise money. I sort of buy the arguments of people that get frustrated by these people that want to kind of limit buybacks there. That's kind of the opposite of the game there. Separate topic. Yeti, they did report earnings better than expected. Coronavirus issues, manufacturing issues, and everything. And they got a lot of price target upgrades though. 39 from 37, 39 from 37. 39 seems to be the sweet spot with analysts there. Overall, yeah. Other than that, people pay up for those things. Sales are good. Beat forecast there overall. Wow. I can't believe it. To me, that's interesting. Yeah, there's a lot of people that focus on dividend income there, and it's interesting, but yeah, that is fascinating to me too. Yeah. I saw that. Yeah, I saw the argument yesterday about the way companies present their fundamentals. They're actually kind of moving away from that now and coming up with even more clever ways depending on the company. But yeah, that started when I was like in I guess I'm older than that. It was about 15 years ago that really started, where they came up with that term and decided that's how they were going to do it. That's interesting, but yeah, to me it's there. It's like some of these moving averages. You use a 200-day moving average and people go, it's nonsense. It's a line on a chart. It's an average. But if enough people look at it, then it makes it become a self-fulfilling indicator. Same with that. Corporate bond market it's a little dangerous, right? Depending on where you're looking at there. I don't talk a whole lot about that because it's not probably something most people are excited about. Starting to look a little odd there. I'll be honest, we could probably do a little sort of video or analysis on that, just going through some of the different stocks out there. It's interesting. I don't know if that's something that floats everybody's boat, but Microsoft, what do you think about Microsoft? It did get a little extended, did pull back a little bit. Obviously, a very strong stock, not something you want to play against at the moment. So you just full steam ahead for that one, it seems, at least at the moment. Yeah. You want Amazon to drop? You want Amazon back below 2,000 there? Well, if the markets ever pull back on these big tech stocks, kind of take a break, you could justify an argument for at least profit taking. I don't know if that's enough to pull it down to 2,000 in the short term here, but other than that, yeah. Would you miss the earnings pop or something? You want to take your shot again? Careful on some of these REITs, by the way, like that Crown Castle, very extended in the short term. Stocks don't like to do that. There's a lot of stocks like that right now. Doesn't mean that they have to pull back, but they do tend to take a break if anything. So, yeah, I love it. What's considered a low interest rate for a home loan? I'm not sure the question. Like, what's considered a low interest rate? There's a lot of variables there, right? Like anything else, I guess, if you're shopping around and you see something lower than another one and it's an actual legitimate lower rate, then that would be the definition. But I'm not sure. Do you use stop losses? You can, yeah. And I always suggest that for people that have lives. I don't have a life. I'm here. I'm always looking at this stuff. But if you're one of those that says, well, I like to put on a few trades and then I'll check in on them and stuff, yeah, you might want to put in let the software do the work for you. It just depends on your level of engagement, really. There's conflicting arguments on that, and I understand the different sides of it. Oh, gotcha. All right. I love it. All right, well, it looks like we've done it here. I have everything that I wanted to cover for you. I appreciate you guys stopping by. And remember, market is closed on Monday, so no closing beat as well. I'll be here, but no show. And we'll see you again on Tuesday. Have a great weekend, everybody, and enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.